Hey, what's up, guys? Ryan Mallory here. Let's go ahead and get into the stock market here. It's been a bearish week. It was a bearish week last week when I did one of these videos. Again, Friday afternoon, we're selling off big time. It wasn't as bearish as last week, but we did have a Monday that was for the ages. I think the sixth largest sell-off in the Dow ever, from a point-wise standpoint, not from a percentage standpoint, but still, from a point standpoint, that's pretty significant. Today we're selling off. We got the S&P down 1.2% here. It's just continues to chug lower. This is the chart, though, that you really need to be paying attention to. This is the US dollar versus the Chinese yuan, and you can see, look, we got a bull flag pattern going on here. You see this? Consolidation over the last 3 days, and then boom, it's breaking out today. That's going to put a lot of pressure on equities here. Now, of course, Sunday night, anything can happen. The Chinese can peg it and make it much more favorable than what expectations had it for going into Monday morning. However, this is a pretty big problem for the markets right now. This is what's causing a lot of your headaches, because as long as that's going up, producers are not able to sell their products to the Chinese. U.S. producers can't really get their products in the hands of the Chinese people, so because it's so much more expensive for them. Let's just jump right back into the S&P 500 here and start dissecting these charts one by one. You can see here the rising uptrend off of the December lows. It was tested and tested again. However, it broke on Monday in a very decisive fashion. In fact, it gapped below and then went way below it, almost testing the 200-day moving average, but also breaking the 50-day moving average in the process. Last 3 days, we've rallied, go back above the trend line. Now, that looks good and all. We even break back above the 50-day moving average, but we needed follow-through today to be able to get a confirmation that this was a legitimate rally here, because if you look at previous rallies, we get a lot of buying that comes into the market, and it's just sustained buying the whole time. We didn't see that today. We actually have a sell-off coming in today, and if we break these lows from yesterday, I think that's much more bearish going into Monday's trading. Now, let's say after today, the market closes down, and on Monday and next week, we see a lot more sellings, kind of like what we saw, like, say, back in December or October of last year. Okay, this is a big key support level then that the market needs to hold, and that's going to be right around the 2742 mark. Again, that's about 165 points away. Not likely to happen next week, but it's very possible. I mean, we get a couple of days like what we saw on Monday, and we will be testing that level. So right now, I'm actually short the market. So when the market rose yesterday exponentially, I didn't have a lot of confidence in that market rally. I've seen these dead cat bounces before. I didn't feel like the market had really sold off enough. And if you take the Bollinger Band and apply it to the S&P 500, you can see really what yesterday's rally and the 2 days that preceded it. It was really about getting back inside this lower Bollinger Band, inside of it, so that it could resume the sell. That's at least what I was thinking. So when it rallied like this yesterday, I went ahead and bought some SPXU. This is the only thing I have right now. SPXU. It is doing pretty solid today. I got in yesterday at about 28. Essentially, I tried to get long on this yesterday when it broke through 28 at about right about there, so $28 flat. It's up a good 3.5% for me today. Solid trade so far. Really curious about how it closes. Can it break above the previous day's highs, or on the S&P the previous day's lows? You got to remember, this is a 3-to-1 inverse ETF, so that's important to remember. So it's going to be a flipped chart with a much bigger exaggeration of price movements. Let's talk about some of these movers and shakers here today. You got Uber, UBER. Huge earnings miss. You can't trade this stuff. I mean, people are going to be buying it. If you were to buy the dip on this, the only way I could see doing it is buying it here and then putting a stop loss below yesterday's lows at 38.32, just below that. See if it holds. I think it's a horrible trade setup. I wouldn't do it. Right here, you got this like bearish island reversal candle pattern. That's usually not a good sign going forward. Now its counterpart, LYFT. Same kind of chart. In fact, it's kind of almost like a bullish kicker, except for the fact that this candle needs to be reversed. You need to have the open here and the close up here. But anyways, not a bullish chart. I actually tried trading LYFT earlier this year, and I really liked this inverse head and shoulders pattern. I thought it was going to materialize back in June. It didn't. I think I took a loss on it, 2% or so. It didn't work out for me. But I'm looking at the chart now. It's just, instead of having this inverse head and shoulders breakout pattern, it's just turned into like a sideways malaise. It's just, there's nothing there that really gets me excited about wanting to trade LYFT. So yeah, I would pass on it. In fact, if anything, I think the bias is probably to the downside. Shop and McDonald's, man, these two stocks have been on fire. McDonald's I traded and closed out earlier this week for like a 0.2% profit. It wasn't nothing to get excited about, nothing to call mom and say, hey, check out what I just did, nothing like that. But Shop is another one. I've tried trading it a few times, good and bad, but you got to play it off of this 50-day moving average. That seems to be where the money keeps getting attracted to it at. And it's not right on a tested 50-day moving average. You kind of just got to eyeball it when it starts getting close. I've not had I can't say that I have a lot of success trading this stock. It's a beautiful breakout play right now. It's coming in the most unlikely of times when the market's selling off hard and heavy the last 2 weeks. This thing has just been a real bright spot for the market. I wish I could say I'm long on it right now and that I've been riding it since 341. I can't. So, but to whoever who's been playing it, good job. Congrats. Keep raising those stops though. MCD though, I was just talking about MCD. This is an amazing trend line. I mean, look at this thing. It just keeps on going. You look at it back from like the February lows. It's just been tapping that trend line and then popping back up every time. It's been higher for the last 4 days or 6 of the last 7. I got out of it. I regret getting out of it. I let the Monday or the Tuesday flush. No, it was Wednesday. Wednesday when the market flushed out. I got out of it. I was like, see ya. I'm not going to deal with it. That was a mistake on my part. I wish I still had the trade. It's turned out to be a real beauty. I think I got out at like 213 or so, or a little bit below it. It's at 220. This is the trade. This is trading for you. Trading will make you feel foolish all the time. Even if you're a successful trader, you still feel foolish all the time by the stock market. That's just what it does. The market's not here to make you feel good about yourself. If you're looking for a morale booster, don't try to trade stocks because it's going to make you feel like an idiot all the time. That's what McDonald's did to me. I looked like a total clown for selling that thing where I did. I was trying to protect profits. I had a little bit going into it. I felt like the market was going to resume trading lower on Wednesday. I was like, you know what? I'm gonna raise the stops. At least I'm gonna get a little bit above break even if the thing does pull back. Because you look at back here on this day, back on Monday, it sold off pretty good. I recovered on Tuesday, but this little dip here is what got me. Now, hindsight, what I should have done is I shouldn't have been as aggressive with my stop loss. I should have had my stop loss below this whole consolidation pattern there. But I felt like I was getting a little bit lucky with that bounce on Tuesday, and I said, okay, I'm going to make sure that I keep the majority of these gains. If this stock wants to really run, it'll do so out of the gate. No, it had to shake me out first and then take off. It was a real pisser. I'm not going to lie. I'm still a little bit bitter about it. Whatever. Now let's talk about biotech stocks and why I just don't trade these things. These things, it's like playing duck, duck, goose in a minefield. Why would you want to do that? It's such a dangerous kind of trading game to be engaged in. These things are crazy. You're not going to get me to trade these things. The one thing I will trade at times is IBB when the opportunity arises. But you can see over the last six months or so, there's not been much trading opportunities in IBB. It's kind of a dead ETF. But go back to NKTR. Look at this. It's down 33%. I don't even know what the news is. It's probably earnings. It's probably an FDA letter. It's probably somebody, spreading rumor. I don't even know what it is. I don't care enough to even look up what the news event is on NKTR. Bottom line is this is what you get when you trade biotech stocks. Yeah, there will be those that will go up 100% on you, but that's just enough to keep you to play and to rack up too many losses like NKTR here today. XON, another perfect example here. Don't know what's driving it lower. It's down 12%. Why put yourself through that? Why take on a 12% loss? Look at this too. I mean, if anything, this thing's like more shortable than anything. I don't want to short it. Definitely not going to short. Not a $6 stock. Definitely not in the biotech industry. This thing could get bought out tomorrow or something, or get an FDA news. You just can't. I don't care how good the technicals are on these charts. You don't trade them. Just don't trade them. This is like the new penny stocks, right? People who've been burning penny stocks, they go to biotechs and they're like, oh, I'm gonna make my big money off of the biotechs, and then they probably do worse in biotechs than they do in penny stocks. I would probably feel better about trading penny stocks than I would. I don't know. I hate both of them. Again, just stick with IBB. And then you got retail. RVLV testing its lows from I guess that was the IPO. I don't know much about this, but again, this is earnings. This is what you get when you play earnings. Don't play the earnings. You got Matt. This is great. You can't really prevent this. They had like some kind of whistleblower letter come out, and this thing's down 14%. That really sucks. For the people who are long on that stock, that's a tough pill to swallow, because you're taking a 14% loss on a big cyclical consumer discretionary stock like Mattel. That's just a real crapper right there. Let's go through some of these FANG stocks and we'll wrap it up here. I'm going to do them really fast. You got Facebook. This is the long-term trend line you want to be watching in Facebook off of the December lows. It's holding it so far. Today's price action isn't all that worrisome. It's the broader market price action that's worrying me right now. You got Amazon. It's got this support level right here. Hold that. You're good. If it breaks this next week, this is what you have to contend with, this massive long-term trend line that really doesn't have a higher high. Instead, it looks more like a double top that's trying to form. If it breaks this trend line around in the 1670s, 1680s, then I think you set up for a scenario where we could be looking at it to retest the December lows, but the market's going to have to get really, really bearish for that, I think. And then we got Apple. This one, I don't know where you go with it right now. Unless you're a long-term investor, then you just hold through it. But from a trading standpoint, it's like a triangle pattern that had a head fake off of earnings and it went straight back down. Really disappointing if you're a long-term Apple shareholder. If you're trying to trade it, there's just not really anything there to really trade off of. I don't even know what you're looking at right here. You got this kind of resistance here that clearly pulled the price right back into this long-term triangle here. I think if anything, you got to wait for a bounce off of this rising trend line from the January lows. That's how I'm seeing it right now, at least. And then you got Netflix. This is ugly, right? I mean, you think this thing could catch a break. I mean, it's at 307 and still dropping today. This is the resistance that you got to be weary of. 330s. I mean, you can see here it's bounced off of it, you know, when it was above this level, when it was support. But once it broke through it, through the earnings, when it got below it, then it became resistance. Look at this right here, 332. Boom, it just takes it right back down. It's been selling. It tried to bounce yesterday, but price action on Netflix isn't good. It really isn't. I think this one, especially if the market continues to go south with the Chinese tariffs and everything else, I think this thing's going to go much more into the 200s. If I had to bet on Netflix, I think it's a better chance that it hits 200 before it hits 400. That's the way I see it going forward. Right now it's sitting at 306. I'll give it a $6 advantage and say that it's more likely to hit 200 before it hits 400. That's going to do it for today. I hope this market wrap up is a bit helpful for you. If you ever have any stocks that you want me to go over, hit me out on Twitter at SharePlanner. Say, hey, what do you think of this stock? Or check out the Swing Trading Splash Zone. It's really good. It's a free 7-day trial. You can check it out. You'll get all my alerts. The alert that I got everybody into right now, SPXU, actually just tell them what I'm trading. This is what I do. I tell you what I'm trading. If you want to buy it, that's great. If you want to follow me into that trade, that's great. I'm going to tell you how I'm going to trade. I'm going to tell you my stop loss. I'm going to tell you my entry. I'm going to tell you my target. I'm going to give you a chart for why I'm trading it, and I'm going to give you a rationale for why I'm trading it. When I update the stop losses, I'm going to tell you when I update the stop losses. So you're going to get all of that. You do what you want, but 7-day free trial, it's worth trying out and seeing if it's for you. Thank you. Take care. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splashzone. Thanks and happy trading.